Hello, and welcome back to the Intrepid Investor Podcast. This is Vanessa Dallas, your host, and I am so excited to be back. I was looking at the last time I put up an episode on Spotify, and it was October last year. And I am so sorry that it's taken me so long to get back into it, but life happened. I had a lot of commitments I had to prioritize with the business and then also with family and all good things and all things that are building and growing and being beautiful in every way. But it obviously took my time out of the podcast and I put it on the back burner for a little bit. But I'm coming back better than ever. We're going to have some amazing guests on the podcast this year. I'm also expanding the podcast. So we are going to talk about property and we're going to talk about the top suburbs, places I'm looking at for my clients, actual like case studies, what the best growth models are, how you can find properties easier and better and less stressful, and all those amazing things to just help you build your property portfolio. But I'm also going to focus on wealth in terms of outside of financial wealth. So I believe that there are four different types of wealth. There's your health, there's your spiritual and mental well-being, wealth as well. There is your connections with other people, so your community wealth, and then obviously financial. So I want to really talk about the other three as well because I believe that a proper, fulfilled, wealthy life means that you contain all of these and all of these to their absolute fullest. And I'm going to bring on people, experts that can talk about their different parts of that wealth quadrant and talk about my experiences as well, because I'm building towards a long, wealthy life and it's not just monetary. So let's get into what we're going to talk about today. Now, I do have a few notes here, so you might see me look down if you're watching this on the video. So just letting you know. But basically, I want to talk about 7 issues right now that are happening in Australia that buyers are fearful of. There are so many things happening in the world right now. We don't know, is there going to be World War III? What's happening in Iran? Ukraine is still going through war. Can we fly out? Can we visit family? Are we going to have a lockdown? All these things are in the media. And I mean, I tend to block out the media. I don't actually follow or read or look at the news at all. I do follow the Financial Review, and if I'm going to read a newspaper, it is just the Financial Review, and I skip through anything to do with wars because it's just too much and it's a lot of noise. And as bad as this sounds, it's not directly affecting me or my family. And so why should I be concerned about it? If I was to be concerned about every little thing that happened in the world, well, I'm not going to be in a very happy place, am I? So the way I see it is ignorance is bliss. Very 1984 for anyone who's read that novel when they were in high school. And I'm sorry if that doesn't agree with you, but honestly, I think all we need to do is just focus on ourselves, focus on where we can get, focus on building a good life, and all this stuff that we cannot affect, we cannot change. We can't change anything with the wars. I wish we could, but we can't. So we focus on the things that we can. And what we can right now is our mindset, our wealth, our health, and our community. So that's what we're going to focus on. But going back to these issues that are happening. So there's 7 of them that I want to talk about tonight because basically it's what's stopping people from investing in property. And I'm going to start by having a sort of open view. We're going to zoom out. Because right now we are so zoomed in that we're looking at every little bump, every little move that is made in property prices and supply and demand and everything. It's so tiny what we're looking at. We're looking at it day by day, week by week, month by month, and everyone's getting so freaked out. Property prices are going too high. Have I missed this? What's going on? Is there going to be a crash soon? Oh, what about all these new tax reforms? Everything is happening, and everyone's so looking at the tiny little changes that are going to affect this moment and this moment only. Because this isn't the first time that Australia has gone through hardship. This isn't the first time that interest rates have gone up. This isn't the first time that the taxes have changed. This isn't the first time that the government gives incentives. This isn't the first time that we said that the supply of land is scarce. And this isn't the first time and won't be the last time that cost of living is too high. Through all of the years in Australian property, when you zoom out, the prices have gone up and they continue to go up on an upward trajectory. Even looking at Melbourne, sure, during COVID, they went back a little bit. 2021, they went down. Property prices went down. And I think it went down like 3 or 5%. Don't quote me on that. I've got the numbers somewhere. But basically, they went down. Brisbane, Gold Coast, they went up. Sydney plateaued. Perth went up. So you can see that every place had something different going on at that time. But overall, if you zoom out again, Melbourne's still going up. Yeah, it's at a very, very slow rate, but it's going up. And the prices were much higher than they started higher than what Brisbane and Gold Coast were. So just 6 years ago, Brisbane and Gold Coast were so cheap in comparison to Melbourne. And now it's one of the most expensive places to invest in. So I want to start with that because I just feel like sometimes we focus on the little things. And that is what I'm going to talk about today, the little things. But it's also good to go into this episode understanding that none of this stuff really matters. But I'm going to try and make you more at ease with some of these topics. So, number one, there is a lot of talk right now about the whole, are they changing negative gearing and the capital gains tax? So apparently there's rumors that the government in the next budget, which is coming up in May this year, is going to reduce the capital gains tax discounts for investors from 50% down to 30%. What that means is when an investor sells a property, the profit that they've made on that property will be taxed 70% instead of 50%. So you're not going to be taxed the 30% discount. You're going to be taxed the 70% remainder. So for instance, you buy a property for 500,000, you sell it for 600,000, you make 100,000, you'll be taxed you'll be taxed on the $70,000 that you've made. So the 30,000, boom, straight in your pocket, but the 70,000, the 70% of it will be taxed at whatever your taxable income is. Is that going to affect property prices? Yes. Is it going to make them go down? No. What it's going to do, if anything, is going to make people want to hold on to their properties for longer because they want to make up that loss that they would have had otherwise if they were to sell it at the 50% capital gains tax discount. So they want to make that extra tax that they're losing. What happens when you hold on to property? The supply in the market goes down. Demand is going up. Demand keeps going up. It hasn't even stopped going up. Like it just keeps increasing. It's accelerating every single day. We get more migrants. We get more people that want to move out of home, have their own property, all of those things. So you've got supply that's now going down because investors are holding onto their properties. Demand is going up. It puts more pressure on the market, which eventually means that the prices will be going up as well. So if you're going to invest, should you invest if the capital gains tax is going up? The discount is going down? Yes, you should still invest. Are you an investor so that you can get cash? So are you a flipper? Might be something else you'd have to look into because your numbers might not work as well as what they did. But if you are looking at long-term investing, it's a no-brainer. This should not affect you going into the market. The other one is obviously negative gearing. So they're saying they're going to limit negative gearing to just 2 properties. Should this affect you? If you are an investor, it does affect you. The reason it affects you is because a lot of the properties in Australia are negatively geared. What it is going to push, though, is for us to purchase positively geared properties, which are properties with multiple dwellings on them. So you're looking at properties that you can subdivide, put a granny unit in the back, put another unit, build a unit in the back. We are looking at complex unit complexes, so places that provide you a lot of income because there's multiple dwellings, multiple streams of income in those properties. There's also a lot of properties in Melbourne right now that aren't doing great with growth, but they do have great rental income. So some of those units, which are like 1 or 2 bedroom apartments around the St Kilda area. Now, are you going to change your strategy? Yeah, you'll have to adjust your strategy a little bit. And I'm sure that there's going to be some kind of loophole that maybe you can purchase it in a company and it doesn't matter, multiple different names. And then you've got two, like, maybe you've got two and then your partner's got two. I don't know what's going to happen. I'm not too much into that detail right now. But basically, we're just going to have to be smarter. And there's always going to be ways through it. And I'm going to help guide you through it. As soon as I find something out, I'm going to share it with you. So, I wouldn't be too concerned, especially if you're a first-time investor. It doesn't say that you can't buy negatively geared properties full stop. It's more for the people that have built a bigger portfolio and whether the government's going to somehow make them sell it, which I don't think they can, but I don't know how that's going to work. Anyway, nothing to be concerned about. See, not a big deal. Should I wait for interest rates to drop before buying? No. What happens when interest rates drop? Prices go up. Property prices go up because what happens is interest rates drop. Buyers, for some reason, it's still beyond me because I do not think like this. For some reason, they think that because the interest rate's down, well, you can technically borrow a little bit more, but they just get confident. They're like, oh, yes, I can go out there and purchase a property now. And I don't get why, because a 0.25% decrease in the interest rates is only going to change your mortgage by like $100 a month. So if you can't purchase a property because of that $100 a month, you should not be buying that property to begin with. You should be looking at a lower price range. So anyway, that's beyond me why that happens. But then what also happens is that when interest rates go up, property prices tend to stagnate or go down. Now, it's such a hot market in Southeast Queensland right now that the interest rates are not actually affecting buyers. They're not affecting the property prices. So it's not really doing anything that the government wanted to. In fact, I think that this method, this economic policy is so outdated. Maybe back in the day it would have worked, but right now people have so many sources of income. They don't put their money in the bank to save because technically back in the day the interest rates would mean if they went up, people would want to save onto their money. They would keep it in the bank because they're going to get higher interest. They're going to get money back for what they've got in the bank. I don't know that many people who actually have a lot of money in the bank. I know a lot of people that put their money in shares and they've got their emergency funds in the bank, but no one just stock holds cash in the bank anymore. And if you do, I would highly recommend looking at other strategies because you can definitely get more from places like shares. Anyway, again, not financial advice. Have a chat to your financial advisor. So yeah, if you are waiting until the interest rates drop to get into property, you are going to lose out because the amount that the prices are going to go up in property is with the interest rate falls is actually going to overtake the cost that you thought you had by waiting for the interest rates to drop, that $100 or whatever it is a month, whilst your properties have now gone up by 10,000, 20,000, 30,000 a month. And I've seen this. This has actually happened in the last 4 months. When I was looking for a client, every week property prices went up by 10K. I'm not joking, $10,000. So if you think your $100 a month is going to make a big difference to your property and your repayments, you better reconsider that. And I honestly think you need to maybe buy something that is less expensive. Put your budget down. I have an Instagram post where I talk about affordability capacity versus borrowing capacity. It is huge to know the difference. You need to know the difference. Your affordability capacity is what you can actually afford. Your borrowing capacity is what the bank says you can afford. Big difference. check it out and make sure you do your numbers because if it's not working out for you, you just need to drop back a property class, go down, go from a house to a townhouse, move one suburb out, do whatever you need to do to make it more appealing for you to buy now, if you can buy now. Can I still buy property if I feel priced out? So, a lot of people think that they've missed out. Oh, Brisbane's too expensive. Oh, Gold Coast is too expensive. Oh, Perth, that's already gone. Townsville's already gone. Everything has just gone crazy expensive. Yes, it has. There's actually no lie there. But why does this affect your position? Bringing you back to the start of the episode, property prices do what? They always go up. Zooming out, big lens zooming out. They've always gone up. Upward trajectory. What happens in the short term? Who knows? Your mortgage is for 30 years. You're probably going to hold the property for at least 10 to 20. So let's be honest. Do we really care about what happens right now in this little speck of time compared to what you could make in the long term? No. So if this is what we know, that property prices are basically always going up with a zoomed out lens, then it doesn't matter that the property prices have gone up in such a short amount of time. What it means is these areas will eventually get to a bit of a stagnation. So, for instance, Southeast Queensland, I don't think it's going to happen until after the Olympics. We're bringing in way too many people, way too much infrastructure. It has been a place where a lot of people want to migrate to now because they've heard about the amazing weather, lifestyle, everything like that. So, I don't see anything happening to turn the market down in the next, well, until 2032. Perth is having a lot of issues with supply right now. So they actually don't have enough land. The construction costs are too much. So it's just making it really difficult to add more supply into the market, which means that you've got high demand, low supply, pressure on the market, property prices still are going up. If you think you've missed out, maybe it's just because you can't afford in those markets right now. And that's okay. That just means that maybe you could go from, again, a house to a townhouse, go that other suburb out. So Brisbane, maybe you can't afford Brisbane, but maybe you can afford Ipswich. Maybe you can afford Logan. Gold Coast, maybe you can't afford Miami, Coolangatta, Tugun, Palm Beach, but maybe you can afford Reedy Creek. Maybe you can afford Labrador. And actually, I just released my top 5 suburbs for Southeast Queensland that are under a mil right now and the types of properties that are for those price ranges as well. So if you do want to have quick access, have a look at what those suburbs are, head to my show notes and I'll put a link in the show notes for you to download that. All right. So yeah, priced out. No, Australia's huge. Where else do you want to look at? Let's look at Melbourne, for instance. Melbourne has a lot happening right now because it is actually very unattractive for buyers, investors. High land tax, they're bringing in some other types of taxes, and I think also the crime and everything isn't really appealing for a lot of people right now. But we still have a lot of migration in Melbourne. Maybe we just think that everyone's going to Southeast Queensland because we live here, but at the same time, everyone that comes from international goes to Sydney or Melbourne. That's their first go-tos. That's just how it is. That's what they're known for. So going into the market now that it's low, that investors are scared to invest in, is a good idea because you're getting it at its low point before it actually booms, because it will boom again. The cycle goes around and around. When some areas of Australia are in a low cycle, others are in a high. And you saw it when Melbourne was in the high, Southeast Queensland was in a low. And now the tables have turned. Well, they're going to turn again. But overall, they'll keep going up. Should I buy houses, units, or townhouses in 2026? I actually get this question a lot in my business. So, as a buyer's agent, I have a lot of people coming to me saying, I want a house, I don't want a unit. Okay, why? Because bought a corporate fee. Totally understand that. And it's hard not having control over where the spendings go. You have to fork out a certain amount every month. And then sometimes they might even ask for extra money because the sinking fund isn't big enough, which is like the amount of money that the body corporate holds on to make any repairs happen in the building, in the complex. I really think that people need to reconsider townhouses and units, especially in these booming areas like Southeast Queensland. They actually have really great rental returns. A townhouse in some of the northern Gold Coast areas, the suburbs, actually are outperforming the houses in like Coomera, Oxenford, if that's how you say it. Sorry, I'm from Melbourne. Sometimes I can't pronounce the Queensland suburbs that great. I actually used to say Yatala was Yatala, so let's not go there. Um, yeah, and it's really about what your goals are. That's honestly what it comes down to. If you've got an SMSF, like a self-managed super fund, and you want to buy a property for it, I would probably stay away from townhouses and units because you want to be getting as much money into the property without it going in any other expenses because it's a long-term thing and it's not really that liquid. You don't want to sell it quickly. Whilst other properties you can sell if the body corporate goes too high. It's a bit more flexible, I think, anyway. So if it's your own property, I honestly would consider I'd rather buy a townhouse with a higher rental yield in a more inner suburb than a house with a lower rental yield in an outer suburb. It depends on the location. I'm talking specifically for Southeast Queensland right now, but at the end of the day, it also depends on your goals. So this just comes down to strategy. And if you want to understand your strategy more, please feel free just to send me a message on Instagram at Vanessa V Dallas. I'll have that in the show notes as well, so that you can just ask me any question you have. Now, construction and builder collapse concerns. So, obviously, construction costs have gone up immensely in the past few years, and people are a little bit nervous about buying some of those properties because although the prices have gone up, the quality hasn't gone up. And we are finding that there are a few defects, a lot of delays with construction. There are some builders that are defaulting. And then it's like, okay, what happens to my deposit? So, I mean, I don't really deal with new properties. I much prefer older properties. I find that you can make more value out of them. I find that you can also buy cheaper, more inland, so like more towards the city. So I guess I really, I really think that people need to maybe refocus. I think that new builds are great if you're a home buyer, you're going to live there. But if you're buying for investment purposes, your investment strategy should not be so that you get more tax back. And that's purely why people buy new builds, so that they can get a higher depreciation return. Anyway, that's my 2 cents. So I'd say don't even worry about what's happening in the construction world. Obviously, it affects your supply, it affects your property prices. You've got more supply in there, which means property prices may go down. But if you're buying in good locations and locations that don't have too much empty land around them, then I wouldn't really be too concerned. And then there's also, if we go back to our whole Gold Coast, Brisbane concerns about if you've missed the boat, there's obviously the fear of I cannot get into that market anymore. It is what it is. If you can't get in, you can't get in. I don't have investments in Sydney. I never got into Sydney market, but I'm not going to not invest because I didn't get into the Sydney market. I'm going to look at other opportunities. I'm going to look at Melbourne. I'm going to look at Geelong. I'm going to look at Ballarat. Those bigger cities. I don't really invest in like proper regional towns. Like even Ballarat, I'm a bit Geelong, I don't think is a regional town. I'd call that a second city. It's like a Parramatta of Melbourne. and it's been there for ages. So if you've been priced out of Southeast Queensland, big deal. Move on. Go on to the next thing. Try and find something that works for your budget. Do not try and make your budget work for the property. That's the biggest mistake you can make because then you become a slave to your mortgage. And that is not why we are investors. We are investors to build our wealth. And how do we do that? We buy a property, we get the most out of it, and we buy the next one. That is why I buy old ones because you can get more out of them. But that's for another episode. And you've probably already heard that if you have listened to my podcast before. So, in general, in summary, I've actually had so much fun on this podcast, on this episode. I hope that you guys could feel that as well and that you are walking away feeling more confident about purchasing investment properties. I think investment properties are one of those things that are quite secure right now in Australia, meaning the prices are still going up overall. I don't have a crystal ball. I don't know what's actually going to happen. I am in the market too. So I'm not just saying this because it's part of my business. It's actually part of my business. Like it's part of me. I am an investor. I am buying properties and getting wealth from properties and wanting to have a second stream of income, a third stream of income from properties. I don't just promote this because it's part of my business. I am doing it. I am doing the shit. So, thank you for listening, and I hope you got a lot out of it. If you have any questions, like I said, please feel free to message me on Instagram, reach out, ask me what you think ask me anything really. Ask me your concerns. Talk to me about what you think about this podcast episode. I would absolutely love your feedback. And if you are going to share the episode, yeah, let me know as well. Tag me. Just reach out. I really want to meet you all and I want to help you out as much as I possibly can with my knowledge and the knowledge of other amazing investors and experts in the field that I will be bringing on to this podcast. Thank you and good night.